Hello investors and welcome to my YouTube channel where I study the best investors and businesses from around the world. In this week's video, we'll be going over the book Charlie Munger by Tren Griffin. I highly recommend you read the entire book, which I'll link to down below. In this video, we will look into the brilliant mind of Charlie Munger, legendary investor and Warren Buffett's financial partner. Munger is an exceptional investor, to put it mildly, as the vice president of Berkshire Hathaway. This video will reveal the secrets of Munger's success, laying out in clear details the steps that you can take to hone your skills and become a smart, worldly, and successful investor like him. You've probably heard of Charlie Munger before. He's Warren Buffett's legendary investor and financial partner, and is known for his smart and successful investing. But that's not all. He is also vice president of Buffett's company Berkshire Hathaway. As the fifth largest public company in the world, Berkshire Hathaway is involved in a wide range of industries, including insurance, finance, energy, utilities, manufacturing, and other services. The company also owns Dairy Queen and Fruit of the Loom, and it also owns majority stakes in American Express, IBM, and Coca-Cola. So how did Berkshire Hathaway become so successful? The company's success was largely due to Munger and Buffett's great financial techniques. Munger's investment success stems from his insatiable need to learn new things, and he thinks that great investors must be learning machines. They also both claim to read for 80% of their working days, making knowledge acquisition an important aspect of their work. Munger also argues that while he wasn't born a business genius, he polished his financial knowledge via years of reading and gathering information. Munger and Buffett are also some of the many believers in the Graham value investing system, which was developed by American economist and professional investor Benjamin Graham. What is it about the system that makes it so popular among the world's most successful investors, including Berkshire Hathaway? It's mostly due to the fact that it's based on simplicity. The ultimate aim for a Graham value investing technique is for you to only do what you know how to do. Accepting your knowledge's limitations, for example, is critical. Or said another way, know your circle of competence. So focusing on safe bets rather than taking on complicated investments that you don't completely understand. When using this system, you also purchase stocks that you've calculated to be lower than the future earnings potential. Using this method, you should also achieve considerably better outcomes with your investments. Seth Klarman compares investing to waiting at a bus stop when you have no idea when the bus is going to come. As an investor, it's your responsibility to focus on long-term results to get the most out of your investments, which includes waiting for your undervalued stocks to restore their value. In other words, great investing requires a realistic approach along with patience and courage. However, Munger believes that Graham's system can still be used by anyone because it's easy to understand. In fact, he has 4 key principles that he argues any value investor can adopt. First, it can help to think of owning a share like owning a business. You can't calculate the price of your stock unless you have in-depth knowledge of the companies you're investing in. So before valuing your stock, you must start by figuring out the valuation of the company's core operations. Second, you should purchase at a discounted rate, which gives you the safety net. This is known as the margin of safety, or the difference between the stock market's current value price and its intrinsic value. To use another metaphor, you can think of it like driving on a highway. Ensuring that there is a wide gap between your car and the one in front of you allows you to better respond to abrupt movements. If you drive too close to the car in front of you, you're at a far greater danger of crashing into it. Investing is quite the same. Prioritize your financial stability and purchase at a cheap price rather than trying to forecast future price increases. Third, stay on the right side of the market at all times and try not to let emotions impact your decisions. It's important to be able to spot Mr. Market as the personification of the investing herd for his strange, erratic behavior. When he's feeling sad, he sells assets for a low price. And when he's happy, he pays more than he probably should. Lastly, to be successful, it's important to maintain your sanity. But this is trickier than it seems. To do your job well, you have to stay objective when making investment decisions, and investing based on your emotions can be financially dangerous. And in fact, he goes as far as to say that being rational is a moral duty. To help, make a checklist of each stage of your investing process to ensure that your rational mind stays in charge and emotions aren't swaying your decisions. Munger believes rationality is a skill that can be nurtured, so practice makes perfect. Another common problem in value investing is the "don't just sit there, do something" attitude. This clashes with Graham's philosophy, which values patience and waiting to strike only when the opportunity is right. However, this can be difficult for some who associate waiting with being unproductive. Again, this is another skill that you can hone over time. A Graham value investor must also be fearless. It's tough to make a big move when everyone else is holding their cards close to their chest. But remember that the best investing opportunities are created by avoiding a follower mentality. You might be able to outperform the market if you can resist your natural inclination to follow the pack. Finally, keep in mind that no one is perfect, including Warren Buffett and Charlie Munger. We all make errors. You'll always improve, and your investments will thrive if you cultivate discipline and courage, as well as pushing yourself to learn new things every day. Munger doesn't only follow Graham's rules when it comes to investing. He uses the ideas of worldly knowledge in every investment decision that he makes, which refers to methods of thinking that can be applied to a range of subjects. Munger believes that each discipline's distinctive methods at looking at the world has given rise to knowledge in psychology, history, mathematics, physics, philosophy, and biology. So by observing behavior through these multiple lenses, a clever investor might notice trends that others, less knowledgeable investors, might overlook. So how do you develop interdisciplinary thinking? Spend time actively learning about various fields and not just memorizing facts and figures. Instead, focus on questions like, why do people in each field study what they do? How do they organize their knowledge and put it to use? These guiding questions can help you understand the wisdom of different disciplines, which you can then apply to your investing strategy. This was a recap of the book Charlie Munger by Tren Griffin. I'll leave a link to the book in the description below, but to summarize, Charlie Munger is a successful investor, but not because of some complicated investment formula. Following his suggestions of endless learning, simplicity, patience, boldness, and worldly wisdom might help you invest more successfully. What do you think of Munger and his ideas? Leave a comment down below. Thank you for watching this video entirely till the end. Nothing helps me more than y'all sticking it out to the end, so please consider subscribing to my channel if you haven't already done so. Also, if you enjoyed this video, please leave a like and share this video so that I can continue to make videos like this for you to enjoy.